So by far and large, I think, anyone that's been really paying attention, there's something that I'm providing that at least looks a lot different from everything else. Okay. And I think that it's not a stretch to say it's pretty consistent and accurate. And there's a lot of elements that are precision oriented. Now, if you're new or if you've been following along since last year, it still might be feeling like it's out of your reach. And that's normal. That's absolutely normal. Because you are now just warming up to seeing what these concepts can do and the various approaches that the market presents, the opportunities to use them. So I try, and hopefully you can appreciate this, I try to present the commentary in a way that allows you to find your own model in it. I'm telling you what I'm basing the turning points in real time before it happens, what levels should be key, but don't lose sight of everything that's available in your chart. Like if you see something that might be a breaker or optimal trade entry or something else, some other PD array, you should not be avoiding that, because you're really going to be able to learn quicker. Not that I'm trying to rush anyone through it, but you'll learn better to trust your own analysis versus the thing I may or may not be referring to at the time. And I may be referring to it subconsciously looking at the chart, but because I'm doing something on such a small little time frame to provide proof that you can read the tape, it may not make its way into the comment. Whereas on the video, obviously I'll have more opportunity to present those things. But I want to try to teach myself, which is really what I was doing this entire month, is to focus on the things that I would want to talk about and leave everything else out, like the ranting and the storytelling about experiences, and this is what I did over here, and this is what happened to me, and this is what you should avoid. They will find their way in the live streams, but I'm going to try to do my best to keep the focus on what price is doing right now. So there's going to be times, hopefully, most of that live stream will be quiet, and I'll only be talking about things that are important. So that way it kind of trains your subconscious also to not feel like you got to be busy all the time. Because we're watching price, we're observing price, I'm going to be highlighting specific characteristics that I think are noteworthy for you. They may or may not be catalysts for price runs. And that's not the point, really, because the worst thing you can do is go in, and this is what I mentioned the other day, and pretty much every time I've ever called the market and it moves in my favor. I really don't want you sending me tweets saying thank you and showing me that you made money. I don't want that. That's pressure on me, because I'm concerned that some of you are not going to listen and you're going to try to trade instead of trying to learn how to do this on your own. And eventually I'm going to get it wrong. And then you're going to be upset. And I'm going to be upset because you didn't listen. So take advantage of the opportunity. I'm not going anywhere, folks. Okay. We have a whole year in front of us. Just relax. All these things repeat. And I'm teaching you how to navigate, get through this jungle. Sometimes you're going to step in quicksand. I'll be there to pull your attention away from what you're trying to get yourself into if you would have pushed a button, but you're not going to, right? You're not listening, I know. But you'll learn the lesson. Invariably, I'm going to get something wrong, and you're like, oh, let me just go back to what he said and not push the button and focus on learning. But you'll see that there are times when the markets are really easy. They're real easy, like books you've read before. You just know it. You know the plot. You know the dialogue. You know what the characters are going to say with one another. You know everything. And if you really love the story, the writer, the book, and I have several books like that, more or less Stephen King books, and I can read them multiple times, and I love them, like The Green Mile. You know, that movie, the book is way better, but they did a wonderful job with it. And you're probably thinking, oh, here we go. But Price is just like that when you are looking for things that you are familiar with. My students, my long-term students, and anyone that's ever been really paying any attention to my content, really taking notes and listening to when it is I tell folks not to try to engage price action, it's the days leading up to non-farm payroll. Now, clearly, today I was giving you one more rebuttal to the people that say, I don't know how to trade, or these concepts don't work. And if you knew how to trade, or if there was an algorithm, it doesn't take the day off on the days before non-farm payroll. You're right, it doesn't. It doesn't. But it presents more of a cloud in the clarity and price delivery. Meaning, if you watch the recording I posted this morning on Twitter, excuse me, I mentioned that I wanted to see those two areas remain unfilled. Both of them filled in. Immediately, my response was, it needs to, in the next 3 minutes, in the next 3 1-minute candles, it must deliver the price I'm looking for. Remember, I was talking about, I don't know how far back it was, but there's a time filter I start applying. When I see the market showing me signatures that I may be near an intermediate term high or low, and it may be retracing deeper against me, I have to prepare for that. So I don't like to be part of a intermediate term retracement unless I'm in a short-term trade or one shot, one kill, something that I'm going to hold for a few days. Then I'm not so concerned about that. And my stop loss is so far away from where market price is, it's not a factor for me. But if I'm day trading, I have to have a time filter. And I'm waiting to see, does the market still show me a willingness? Because 3 PD arrays being broken, I'm in trouble. That means I'm probably going to get stopped out. It may enter consolidation, or I'm in an intermediate term retracement. And that's respective to whether I'm bullish or bearish. If I see 3 things that would normally support price while I'm watching price go higher, when you see me doing all the annotations and I'm drawing out order blocks and fair value gaps and saying, this is where it should do this and shouldn't do that. If I'm long and I see 3 of those broke to the downside, that right there is a warning sign for me. It's a warning. So I saw those things occurring in my trade this morning as I was building it up and then waiting for it to pan out and go up to my objectives. There was 2 instances where I wanted to see those 2 gaps remain open, and they didn't. They closed and they went back down to an order block, but that order block would have been it. Like once it hit that, it needs to show me. That's why I was like, okay, it must deliver. It absolutely has to deliver now, because if it doesn't, then I have to get aggressive about taking a lot of the trade off that's on, or potentially collapse the trade. Not necessarily roll my stop up. Rolling the stop up is something you want to do once you book profits. Once you take a partial, then you want to start moving your stop. But you want to do so gradually. I'm not in a hurry. My mindset is not, let me hurry up and protect everything I have in the trade. My mindset is price still showing me a willingness to follow the narrative I have subscribed to? Because if the markets are in fact algorithmic, then these things should remain true. Now, the human in me, the person that's going to be fallible, because I'm not infallible, I will invariably do something and make a decision that was poorly executed on. I own those errors. They're mine. It's not that the algorithm did something false, or it's been changed, or something to that effect. It just means that I made the error. I did. So it removes all the argument, and it's because I'm human and you're human too. You're going to miss a move. You're going to mess up. You're going to get stopped out. You're going to not buy enough, not sell enough. They're always going to be in there as part of the end result of your development and your career as a trader. You're going to have high points where you're like, I was really doing well at this time. And you're going to have these low points where you just feel like you can't find any traction. That's a normal thing. That is a normal thing. I was listening to Tom Hugard, and he mentioned that he had obviously shown publicly to his followers that, when he's not trading on his high note, he admits that, it can look dismal. And that may sound like, wait a minute, this guy's supposed to be the high stakes trader. He's the guy that's making a lot of money. He very well may be doing that, but it doesn't mean that he and anyone else, and myself included, aren't exempt from having periods of drawdown where you're just in a funk. Like you feel like you're just not there. And the market may be doing amazing delivery and price. It may be presenting opportunities left and right, but you just can't align yourself with it. And I may sound very lucid right now, but I'm droopy-eyed. I'm tired. My entire body is fatigued. And if you look at my tweets today, I was mistyping things, and I quoted. I wanted to type 4,200, and I put 4,100, and I think I spooked the market because it started dropping. That was one of the other things I want to see this year when I start doing live streaming. Because when I was on Merck Internet Relay Chat, when I was posting what I believed the S&P was going to do, we would see little spikes as soon as I made that post in the chat room. And to me, I thought it was neat. Like I wanted to see how much of an influence. But most of you, shouldn't be worrying about those types of things. You should be focused on the things I'm teaching, and does the price action support the things I've taught and what I'm focusing on in that very session. But there's going to be periods where you just can't find your footing. You can't find your groove. And the best thing you can do as a developing student is, as soon as you figure that out is the case right then and there, remove risk. Even if you're in a trade, just remove it, close it. But Michael, what happens if I would have held on to the trade? Who cares? Because again, we're going back to that same problem. You're assuming your entire career is encapsulated in that one trade. That's not disciplined. That's not disciplined approach to yourself, reasonable expectations, and you're focusing on money, the right transaction where you're correct, versus are you doing the right things to preserve equity and emotional psychological equity, where you're not stressing yourself out unnecessarily. And you can do that being in a trade while fatigued, or you just feel off, like you don't have the confidence. And that's not the same thing as new developing traders forging patience, because that's normal. You're going to feel that. But if you found your model and you're pretty much consistent on finding setups, you'll have a little bit of drawdown. You don't freak out. You come back from it. You're not in a rush to get it back, and you still find consistency. I'm talking to that crowd right now when I'm saying this. If you ever get to that point where you get into the market and you have a position on and you just don't feel connected, you will not be able to respond as you should when the warning signs are flashing. You'll be like a deer in headlights, and it'll just roll right over top of you. And after you're out, you'll have complete 2020 perspective, and you'll think, oh, I wish I would have, but it's too late then. Versus you get out, it does move in your favor. It's okay, because you removed yourself from that potential because you don't know the outcome. That's the problem when you have something move after the fact. When something happens after it's done, the hyenas will come and laugh and cackle, and they'll think they have something. And when the lion stands up and rips their ass apart publicly and sends them packing, they're not around laughing anymore. So you have to control how much the hyenas can have access to. And in the market, they'll take your ass off completely if you're not in control of yourself, if you don't manage the risk. And the only way you can do that is be disciplined. There's nothing wrong. There's no weakness. It doesn't mean you're not a good trader. If you feel and you acknowledge that you're not dialed in, that means you're not focused. You can't focus. You have things tugging at you. Your attention's elsewhere. You don't feel well. You're just fatigued. You're tired. You just don't feel like you're hitting on all the cylinders that you would normally expect yourself to be doing when you're trading. They're all invitations, as far as I'm concerned, for you to say, you know what, I'm just going to disconnect. I'm going to come back either today or in a few days. I'll take a week off, recuperate, rest. The markets repeat over and over and over again. I've been going daily with you all on Twitter to some degree or another, and it's pretty consistent. Where I'm pointing, the market generally goes there. Some of you would look at that and say, well, that's not good enough. I want to be told when to get in and get out. Well, you need to go somewhere else, because I'm not promising you that. I'm promising you I'm going to teach you how to reprice, but you have to submit to a lot of things. And it's not have it your way mentorship here. I'm not running Burger King. So if you want to have your way of doing it, then go buy a whole bunch of books, a whole bunch of courses, subscribe to everybody on YouTube that runs a course and sells things, and then cherry pick what you think works through trial and error, and then see who does better. Because if you're with somebody that has spent enough time to know what it's likely to do, lost lots of money, learned the lessons from that, how to teach other people how to do it, you want to be under the wing of someone like that, because they generally will help steer you away from the problem areas that they themselves encountered. It doesn't mean they're going to completely make your development free of all kinds of dangers and perils, because you're going to bring that to the table in your own personality. There's character flaws that all of us have. But I think that I'm not stopping. So let me preface it by saying this. But if I were to stop right now, what I've already demonstrated so far last year and just this past month and today and yesterday is enough to communicate that there's something more going on except for buying and selling pressure. And I want to talk a little bit about this because I mentioned it in tweets last night, and I ruffled some feathers from folks that are in the industry and they want to come at me with their alma mater. But I understand where you're from, okay? But you don't know where I'm from. And where I came from and what I know is a little bit above what you're used to seeing. And that's not arrogance, okay? So just permit me for a few moments to talk and understand that what I'm saying is nothing egotistical. It's nothing remotely close to trying to be prideful. It's not. But I gave an analogy that if you were a card player, okay, and you went around, you were playing cards. I'm not saying you go to a casino, okay, but if you went around to where they have private games. If you were a card mechanic, it means you were a card cheat, okay? You know how to run up a card hand, run a deck, deal seconds, deal bottoms, deal fifths, thirds, seconds. Those are characteristics of someone that is highly proficient in card handling. Now, some of you might be thinking, well, what does this got to do with anything? Just listen. If you had that skill set and you sat down with a lay audience of card players, and maybe they've been playing for a long time, but they just never seen sleight of hand before. They've never seen a mechanic's grip. They've never seen dealing seconds, bottoms, never seen anything like that. And a mechanic that's proficient in doing that and running up a deck. I'm going to show you, okay? I'm going to give you a visual representation of what I mean by this. I'm going to take a brand new deck of cards. I'm going to peel the plastic off of it. I'm going to show it to you. It's all real, not some gimmicked cards. And I'm going to run up a hand with shuffling right in front of you. And I'm going to deal it out. It's going to look just like everything's on the up and up. Everything's fair. You watch the cards go interwove one another. It's shuffled, legitimately shuffled. But I will know every card in its proper order from top down. For those of you who are familiar, look up or Google how to riffle stack a Cy Stebbins order from a new deck. That'll be homework for y'all. It's kind of hard to find, but that's what it is. That's the procedure. That's what a magician does with a brand new deck. Just because you hand the cards to someone else at the card table and you watch them shuffle, that is not fair. Because I know how to run up a hand. I know how to cop cards. I know how to switch cards, all while we're playing. And if I was less of a person, I could make a lot of money doing that. Lots of money doing that. I know how to count cards as well. Irrelevant, I know. It's not pride. I'm just telling you, these are the things I pursued when I was a little kid into teenage years. Those are the things I want to be good at it. To me, I think performing magic was amazing. And I know for some of you watching me do these things, it feels like a magic trick. There's got to be some kind of gimmick that I'm doing, but now I'm doing it live. And I'm calling it and explaining it to you beforehand why it should do certain things at these specific levels. On these very candles, watch this candle, it's going to act as support, act as resistance. I'm taking you behind the scenes and showing you what sleight, what gimmick the algorithm is going to be using at that moment. Now back to the analogy and the relationships I'm trying to draw here. Because it's my position, it's not necessarily important for you to believe it, but I feel, because I'm obsessively compulsive about things, I feel I have to at least make the argument as much as I can, and this will be the last time we'll talk about it. Admittedly, that probably sounds like it's not going to be true, but it will be the last time I'm going to talk like this. We all watch price deliver through our trading platforms, our broker feeds, CNBC, the ticker tape, everything, all that price fluctuation. Think of that as cards, individual cards. Every time there's a new tick, every new market price printing, that's a new card in a deck. How many cards are there? Well, let's just say, for the sake of a whole 24-hour day, there's 52 cards. Now, every one of those transactions obviously would amount way beyond 52, right? But we're just going to draw a very vague analogy, but it'll make sense in the end. I have folks that have been floor traders from the CBOT and the CME. I have had people that came from hedge funds. I have had folks that claim to be bank traders. Okay. I've had folks that literally would be the bee's knees on Twitter, but they're not market makers. As much as that title is associated with them, they may be called a market maker. I made the market for oil. I made the market for copper. I made the market for options on this stock. You dealt in price. You didn't make price. You're dealing in the price feed that's coming. Okay. You're not establishing and ordering where price is going. Ultimately, you have no say-so in that. You might find and provide liquidity. That's fine. That's not making a market. That's the point I'm trying to make. And not all of you, because you're all indoctrinated. You're used to seeing all this misinformation. You only know as much as the books and the people that train you when you go to work at these financial institutions know. That's it. That's all you know. But when those types of individuals come into this fold and they see what I'm doing, how I'm calling it, what I'm using, and the logic behind it, frankly, they're like, what the fuck is going on here? And it rattles them. And the first thing that they reach for is, okay, I got to immediately challenge this guy because this is completely upsetting my entire understanding. I got to question my entire reality. What I've been doing for work for this company, what I've been doing as an employee of this firm, what I've been doing for this brokerage firm, what I've been doing for this bank. Now I feel like I got to question my own reality because this shouldn't be possible. Is there really an algorithm, or is this guy full of shit? Yes, it's always the same way. And some are very belligerent and they're like, oh, dude, you're full of shit. Okay. I'm still going to do what I'm doing. And you don't know what I'm doing, but I'm going to keep doing it. And the others very politely will say, I appreciate what you're trying to do. And I appreciate what you're saying. And maybe you found some patterns, but your logic is the why price is what it's doing is wrong. I don't believe I am. I don't believe I am. In fact, I know I'm not. So if we were to go back to the analogy for cards, okay? We're all watching price. It's just meandering around, going around, banging around between specific levels, and it looks all random. And these professionals and retail traders alike will look at the charts and attribute a bias, a sentiment, an opinion, if you will, and attribute a measure of monetary risk associated to a pattern or the output of an indicator, which only does one thing. It number crunches what the price is already done. Not that it's guaranteed to do something as a result after that. It's looking at something, crunching the numbers, chewing it up, and spitting it out, and you're trying to read it. Much like individuals that take chicken bones and they shake them in their hand, throw them down, and they try to tell the future from that, or read palms. It's all bullshit. That's nonsense. The market has no affinity for algorithmic animal patterns. It has no affinity for Elliott wave. It doesn't even know what Elliott wave is. It's not keeping count of the waves, okay? It's not doing all that shit. It has nothing to do with Wyckoff. Nothing. Supply and demand is an illusion. In commodities, it's a real factor. That's a real market. It's real. It's the world's grocery store. There's a real supply and demand for corn. There's a real supply and demand for wheat, for gold. But there really is no supply and demand for S&P. So it has to be what? Engineered. And it's all manipulation. It's gyrating and moving around just like the currencies, which has no real supply and demand factors associated either. So when you put down your alma mater for a few moments and just take a step back and think about it, we're all watching price go through the ticker tape all day long. That's equivalent to the cards shuffling at a table we're all sitting at trying to play our hand. But amongst all of us, there's a mechanic. That hand that you don't see, that's running the cards the way they want those cards ran. They're calling the pace. They're calling the shots. They know how to make your hand look good enough for you to play it, and you'll plunk your money down, and then they're going to run you. They'll ante up. You'll ante up because you feel like you got a strong hand. You got kings and aces. That's a great hand. Well, it's really not that great a hand when you have a royal flush and spades. Kind of defeats the whole purpose of feeling like you're invincible when you have someone that's on the other side of the table who ran the cards, dealt them out to everybody. And I'm going to show you what that looks like. I'm going to videotape myself doing it. You can see it happening. And no, I'm not going to be doing weekend tricks on the YouTube channel, but I just want to give you a visual representation because it feels while you're there like everything's on the up and up. It's normal. It's just trustworthy. It's a brand new deck. You could bring the deck to me sealed up and I'll still do it. You need 2 perfect Pharaoh shuffles. A football team's name and a basketball team's name. And anybody that figures out how to run a size Stebbins order in a deck of cards, a new deck order, you'll know exactly what I mean, what I just said there. That's how you do it. But a new deck ran up like that becomes size Stebbins. It means all I need to know is the bottom card and the top card. What does that mean? I need to know where is the buy side and the sell side. Then I just know the rest of the order. I know the PD array matrix at that moment. I know what is likely to be used in price. But the price may print something. It may not give me a breaker. It may just give me a fair value gap. It may just give me an order block. It may just give me a propulsion candle. But there's so many things, ICT. How do you know? Because it's only going to present 1 or 2 things. That's it. That's the benefit of learning everything I'm teaching you, because if you're going to be a one-trick pony, you can make money. Yes, you can just do breakers. Yes, you can do the model I taught last year on YouTube. They work. It works. I'm not limited to that. Neither should you be. Once you learn how to do last year's model, which is this year's model, that model is wonderful, but hopefully it'll provide you the calmness not to rush to learn to do everything right away. Just let it happen. I didn't learn all this stuff in 1 week. I didn't learn it in 1 year. It took a lot of time. And you're going to find that you're going to wrestle with yourself. And some of you probably go into this, and you probably watched some of my videos in the past and said, I'm going to master the breaker. I'm going to master the fair value gap now. I'm going to master institutional order flow entry drill. And you're finding difficulty with it. And you're second guessing yourself. Well, maybe it doesn't work as well as I thought it did. No, you're just trying to push too fast, too hard. And maybe that PD array is probably not your forte. Maybe there's another one that's easier. Visually, I think that breakers and fair value gaps are the easiest one to see. But when we're watching price, and it's moving around, gyrating around, that's equivalent to every trader sitting at the table watching the deck get shuffled. Looks fair, right? Everybody's watching the same price. We're all watching ICT talk about the real-time data in ES. Those candles are moving around, the market's being shuffled. And then finally, I'm counting cards. Not candles. I'm not counting candles. I'm counting cards. And I'm going to see when that hand is perfect for me to bet against, because I'm running the deck up. Who's running price? I'm running price. I'm waiting for a specific thing to occur. And then I'll ante up. I'll pyramid, add more to the pot, add more to the pot.